guys, hello and welcome back to Green Pips FX. And on today's video guys, I'll be speaking about the most important thing that most people tend to ignore, which is risk management in terms of how do you manage your trade, right? So like what we're seeing here on the screen, so we've had this Euro NZD buy since last Friday. I'm still holding this. um, Now our overall take profit target is this liquidity high here, right? The swing high here. Now this doesn't mean that since we took our trade here on Friday, we placed our stop loss there and a take profit there, it doesn't mean that we just sat back and waited for either one of them to get hit, right? No. We have to manage this trade accordingly, according to certain rules and principles that will ensure our safety throughout our trading in the long term, right? Because if you have a trade in this section here, right? Sorry, if you have a trade somewhere there, right, and you have you have your trade here, you have your stop loss and your take profit, right? In some instances, right, price could literally just come up into some area of supply and then decide to break off, right? For example, maybe like this area here, right? It's a very strong supply, so price could literally just move from there and come even take out this this low right here and change its trend, right? But that doesn't mean that if we take a trade here, right, price is going to move until this area here, which is a certain level of RR, and from there it could either decide to go bullish or go bearish from there. Now we need to ensure that this trade has been protected, right? We can't just allow price to move according to our anticipation, and then some liquidation move or some news movement, right, to come just take us out and end up with a loss in a trade that had massive profits in it, right? So this is how and this is how and why trade management is important, right? So based on my rules and my principles, based on my perspective, of course, this is no financial advice of any sort, right? This is just how I do it, based on how I view price and how I understand price moves, right? And this has been tested over the long term, of course. So so what I do is set my my take profit targets, right? So I'm gonna have multiple areas in which I'm gonna manage my trade by closing it in certain percentages, right, based on what I'm seeing in price, right? So we had this trade in the 5 minute, right? So we had this trade in the 5 minutes. So let's now go back there, right here. So this was my trade. So at this time, what I had was price pushing bullish, right, breaking this structural high here to make a new high here, and then I was expecting a retracement to this 5 minute order block right here, or area of demand, whatever you want to call it, right? And at that point I had this liquidity here being taken out by this high here. So this was my overall high that I anticipated could come and form an overall low, and from that low price could literally come up and take out this high, and that's what price did, right? So price came down and triggered my entry. So there was my entry. What I was looking at was a simple, since we had an intermediary downtrend, right? You can see this is a clear it's a clear bearish trend. So I wanted to see an end to that bearish trend after my entry was triggered, which of course this bearish trend came to an end right here with this breakout structure right here, creation of this low from this high, which could also be labeled as a change of character or a break of structure, whatever you want to call it. And from there I just wanted to see after this break here, I wanted to see price retrace into an area of demand, of course, and from that price could literally just push up, right? Say this is my entry, price could retrace and then push up and break this structure, right, creating a new low that's above my entry point. And from there my trade could now significantly just go to break even. Why? Because if price wants to come back down and make a retracement, then it should not break this newly formed low unless price wants to violate and change its market structure, right? So that's how I managed this trade, right? So after this break here, creation of this high, price retraced, formed this low, and then took off to break this high again. So price created a low which was above my entry point. So at this point, at this break of structure here, my entry was at break even, so I was never going to take a loss on this trade. Now from there price could now just go up, and I set this high here as my first take profit target, or my 40% partial on how I manage my trade, right? So I was going to take 40% of the lot size used right here after the break of this high here, which took place here, right? Why? Price could literally just come here, right, and then from there price could take this liquidity resting above these highs, and then could instantly change its structure and go bearish, or make even a deeper retracement into this area here, and take me out at break even, right? So if price wanted to take me out at break even or even change its structure, right, I wasn't gonna end up with nothing in this trade, judging by the fact that price moved all this way up here, right? So we come now to the part of, so let me just reduce these drawings in here. Let's make our chart clean. There. So so let's now go up and see. Okay, so this is the trade, right? So at this point here, this 40% partial, right? Now we can see that price at this area here had already moved by 5 RR, right? So I had an 18 pip stop loss and a 92 pip take profit target. So this price at this point here was already at 5 RR, right? So let's take an example. If you're trading like a 100K account, right? So, and we just risked like 0.5% of the account in this trade. So we risked $500 to be exact. Now, if you risked $500, then let's just bring up the calculating this calculator tool here. So if we risked 500, right, and this trade went to 5 RR, right, so it's gonna be 500 times 5, right, the actual RR, right, so it's gonna be 2,500. So we're gonna divide this, so we're gonna times this by what? So we're gonna take out 40% of this, so it's times 40%, right? Boom. So we're gonna take $1,000 off of this area here, right? So we have so let's just put this text here, and at this point here we have ourselves $1,000. We can just put this big. There we go, right? So we have $1,000 off of this area here, right? Okay, so let's just make this big again, and from there we now our next take profit target, my next take profit target was this area here. Why? Because this was a very strong area of supply. Right now, as you can see, price from here, I expected a reaction from here. Price could literally just come here, break structure, come into deeper retracements, and then, you know, from there price could decide if it was gonna go bullish or bearish, right? Whatever price wanted to do, you know, I was secure. So the minute now, as you can see, price came here, right, made a low, made a high, made a low again, right, and then broke bullish once more. So, you know, that's the significance of seeing price like that. So this was my next 40% partial, right? So at this area here, price had moved 10 RR, right? Okay, so let's go now to our calculator once more. Okay, so we can just remove we could just remove this. I don't know, why is it lagging? There, we could just delete that. So now we are at 10 RR, right? Remember, our 1 RR is 500, so it's gonna be 5,000 here, right? Now remember, we took 1,000 there, so we're gonna you know, we're gonna minus 1,000, and we're gonna have 4,000. And this 4,000, this is the actual profit running here. We're gonna times it by 40% once more, right? So times 40%. So it's gonna be 1,600. So we're gonna take $1,600 right here. So let's put it like that. It's gonna be 1,600 to make it. Oops, sorry. We can just delete this. We can just delete this one here, and then put this 1,600 there. And from there, our final take profit target was all the way up here, right? All the way up there. So price still hasn't got there yet. But if price reaches there, then this will be 14.8 RR, right? So we can now just delete this, and it's gonna be 14.8 RR, right, times 500. So it's gonna be sorry, I just timed it by 5,000. It's gonna be 500. So let me take this out here. It's gonna be 14.8 times 500, right there. So it's 7,400. But remember, we have already taken out we've already taken out this here, right? 2,600. So minus 2,600. So it's gonna be 4,800, right? Now remember, the percentage of our lot left in this trade is 20%, right? Because we've taken 40 here, we've taken 40 here, that's 80. So we've remained with 20%, right? So this is gonna be times 20, right? 20%, 900, 960, right? So that's the last take profit target, right? So we're gonna take $960 here. So we can just put that to 960, right? 960. You can just add the dollar sign there to make it look a little bit more attractive, and there, right? So we can do this also, and boom, right? So this is gonna make like a total of what? So let's just compute that total. So let's bring up the calculator again. So we're gonna have 1,000 plus 1,600 and plus 960, right? 960. Boom. So we're gonna end this trade with a total of $3,060, which is, you know, this is 3,560. That's a total of like you know, on a 100K account, this is a total of 3.5 RR. You know, then if you're doing the challenge or whatever, then you're just left with I don't know what, another 2% or 6%. So you know, it is what it is. But I just wanted to show you guys how to properly manage your trades, right? You don't just leave your stop loss and your take profit targets open, right? You need to, you know, to manage this accordingly, because if price does this, then you're ending up with a loss in a trade that you shouldn't have anything to do with a loss, right? Now, with that being said, guys, I hope, you know, I hope this video was very informative to you. And if it was, then don't forget to like, subscribe if you haven't, and turn that bell button on for notifications. And until the next one, guys, stay safe, have a nice trading week, and of course, peace out.